Hey, how's it going, everybody? Welcome back to the channel. I know I'm recording back-to-back days. Crazy. Today's my day off. Haven't had a day off in a long time. So I'm just going to do a little quick update about the stock market, about my portfolio, just like yesterday. So please drop a like, subscribe, turn post notifications on. Let's get right into it. So, boom. They had the meeting. They had the freaking Fed meeting already. Guess what? We're going to get a 0.5% interest rate hike. And they say that it most likely will keep on doing it until they get to their goal of 2% inflation. That's what they said. All right. And of course, I believe with that, the market will continue to go down and earnings will continue to get low, go bad, go lower. Companies will become less profitable, and boom, just how the Fed really lagged on starting their rate hikes, like how they let freaking inflation go way more crazy really fast. They will, in fact, overhike way too much and start cutting rates way too late, which will mess up all of the company's earnings. That's what's going to happen. That's what usually happens. They always are so dramatic in what they do. And next thing you know, maybe inflation will go down a lot faster, or they will God, I can't even talk. But we'll see inflation go down a lot more, and then boom, once we hit 3%, we might see maybe deflation, right? That's another possibility that we might see is deflation. And that's when the freaking Fed's gonna have to start cutting rates quickly. And boom, they're going to just keep messing it up over and over and over again. Just how they gave out too much stimulus, overstimulated the economy, and inflated, like brought inflation so much higher, like 8, 9, 10%. Boom, they're going to increase rates way too much. And boom, they're going to cause deflation, which is not what they want. They want to have a 2% inflation like the normal, which means they're going to have to cut rates really fast. And I don't know, maybe they might overstimulate again. That could be another possibility. And then it's just going to be an endless cycle. Boom, 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 boom. But hopefully they do not do that, and they can cut rates at the appropriate times. Obviously, these guys are professionals. They know a lot more than all of us regular people, especially me. So I assume that they will hopefully do a good job, hopefully, but I still think that the economy will get really bad. How bad? I have no idea. I'm just saying, like, with these interest rates, like, I've seen that they've been increasing interest rates at such a freaking historical pace, super fast pace, that whenever we start seeing it affect the economy, it's gonna affect the economy like a freaking avalanche. It's gonna be boom, 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 boom. It's gonna like freaking stop the economy. Like, I bet like a lot of companies' earnings will go down badly. Like they're like Tesla, for example. Tesla, I think they're predicting 40% to 50% growth. Hell no, I don't think they're gonna do that. Especially if the economy is really bad. Can they even get to 20% growth? Man, if they get to 20% growth, I don't even know. 10% growth. Maybe, right? Even 10% growth could be a maybe. And with that 10% growth, and look at the PE of 49 with the 4 PE of like in the under 30, I think, which is freaking crazy, right? But of course, like I said, that's the current estimates, current PE right now with the earnings that they have right now. So if earnings do get right, we might see a readjustment in PE and forward PE, which means that we might see a higher PE, which means that Tesla might have to go down even more to become an appropriately valued stock. Same thing with Amazon, same thing with all the other ones. Meta, even though Meta right now I think Meta might be the best big tech company to buy for the value right now. Look at that, 11 PE, if that is accurate on Robinhood. I think right now Meta, anything under like $150 is a freaking screaming buy right now, you know? And if I was not in margin right now, I would totally be buying a hell of a lot of Meta right now. In terms of the big tech, I have to really look at Google, but just valuation, if we can see where the hell Google is. Let's look at Google. Even Google, I think Meta is the number one purchase right now. Then Google. Let me see Microsoft. Let me see Microsoft real quick. Oh, Microsoft is a little bit more expensive, yeah. So I will say Facebook first, or Meta or whatever. Then Google. Then Microsoft. Maybe Microsoft or Amazon, or even actually Tesla first. Meta, Google, Tesla, Amazon. I think Microsoft and Apple will start getting right sooner. Let's look at Apple valuation real quick. Apple PE, because even Apple is, they're saying Apple's still gonna have a little bit of growth. I don't think Apple's gonna grow. I don't even think it's gonna. I think it's gonna either stay. It's gonna be like a 0% growth, like no growth at all, or even a decline. Even a decline. So we might see Apple get to like a 14, 15, 16 PE around there. So what would that be? Like a 30% drop from where it is right now in terms of the PE right now. So we might see Apple go down another 20 to 30%. That's my prediction. I would like to see Apple $100 or lower than $100. That's something I would really like to see. When's the last time we've seen Apple at $100 man? Yeah, and like a little bit after the freaking pandemic. But I would like to see Apple under $100. That would be freaking crazy. That would be another 14. That would be like 30% drop, around 30% drop. That's something I would like to see. But those are gonna be. I'm gonna be adding a hell of a lot of these on these three right here: Amazon, Meta, Tesla, and Google for big tech. I've been telling you guys every single time. I'm looking into the chip companies. I think these babies could drop a hell of a lot more too. Hell of a lot more. Like, look at that. I think these babies can drop 50% more. To be honest, I could see that happening. And even though we already seen a pretty big decline, I mean, we seen Nvidia already lows. Let's look at that, up to $108. We could probably see that. We can go back to those lows again. To be honest, so I'm not really, really a quick buyer on that. What about AMDs? Let's look at AMD real quick if I can freaking see it. Oh, let me just change this symbol to going down. Oh, right. AMD. Let's look at the 52-week low. 52. So 52-week low is 52 or 54. Let's see. I mean, I can see this baby down, like same thing, another 40% drop. I can see this baby go down to in the 40s, maybe even 40s, even 30s, maybe. I can see this baby in the 40s. I think AMD is a better valuation than Nvidia, but I'll probably be buying both. AMD being my number one, and then Nvidia being number two. So another one that I'm really interested in buying, also that I already have, is PayPal and MP. I think these two babies are really good. MP actually has been doing pretty good compared to all my other stocks. I mean, it's been holding off. It hasn't really dropped that low. I mean, it went to 26, but I think this MP is a pretty good company, mining company. You can read this if you really want. I'll pause it and see if about the company. MP is good. They need especially to get all the materials to make all those chips. MP. I would like to add some more to that one. PayPal, boom, and then these are my other ones. I'm interested in Shopify, Neo. I think Neo could become profitable. Maybe even 2024 could be profitable. Maybe even 2023. But I have to really look back, get back into it, because I haven't really did my due diligence in a while. Palantir, really interested in that one. IIPR, this one I really like a lot. Another one that's profitable. I think this one also has been doing pretty well. Hasn't really gone lower than the past couple of months. But I could really see this one going back up, back to its 52-week highs in a couple of years. So I wouldn't mind having this baby as one of my top 10 positions, top 5 positions. But like I said, I'm mainly focused in averaging out my portfolio, because I have such a big weight in Shopify. Like, Shopify is 44% of my portfolio, and Neo is 26. So both of these babies will be, both these babies combined as like 70% of my total portfolio, more than 70%. So I need to average out the rest of the portfolio to offset that. Maybe get Shopify down to maybe 20%, 25%. That'll be cool. And Neo down to like 10%. And then get these babies, Tesla, Meta, and Amazon up maybe like to 5% of the portfolio. That'll be pretty cool. Look at that. Meta, how much is this? Not even 1%. So yeah, I need to get these babies up to at least 5% total equity in my portfolio. And then I can finally start buying some of the indexes. But like I said, I do believe the indexes will go down a lot next year. So I'm not really in a rush. There's no rush right now for me to buy. Right now, my main focus is to lower my margin, get that baby down. We just need $5,000 more. So maybe a couple more months, maybe 3 more months, hopefully. If I get a bonus, maybe even less. But like I said, the economy going down, maybe I won't even get a bonus check for where I work. So best thing to do is just dollar cost average. You don't know what's gonna happen. Pay off margin, pay off debt. First thing, pay off debt, margin, then start averaging down into profitable companies. Obviously, if you want to buy into some spec plays, that's probably the last thing to do. Have a little bit of cash on the side. That's the appropriate thing to do. Don't be like me, buying super freaking speculative, unprofitable companies like me, or else you'll probably be down 60% like me, and you do not want that to happen. All right. Thanks for watching. That's a little quick update. Remember, like, subscribe, turn post notifications on, and I'll probably see you guys next time and another day. Hopefully, maybe tomorrow. I'm off tomorrow too, unless they call me out, call me in. And if they do call me in, I'm gonna go in to make that extra money because we're on that grind. But yeah, peace.